And so a lot of people are uncomfortable determining whether a rental was a code section 162 trade or business activity. And what we're going to see, it actually is a much easier determination than most people think, because the truth is almost all rentals are section 162 trade or business activities, even if we don't want them to be, because they generate losses, right? Which could potentially reduce other QBI on the return. So how does a rental qualify? It's either a section 162 trade or business, or it is a rental that is leased to a commonly controlled trade or business that is 199A eligible. There's two paths. So I don't want to kind of get into the weeds on this, because I could talk about this all day. There's more content in your manual about this if you want to read it. I have a whole Tom Talks Taxes article on my Substack about this. Long story short, there are 70 years of case law that most rental activities are code section 162 trade or businesses. The IRS acknowledges it. The IRS has acknowledged that there is so much case law that supports this proposition that they are not going to challenge it in court. You know, there's an example of a case from the 40s called named Hazard, where the rental of a single residential property constituted a trade or business. And that is absolutely true. A single residential rental can be. And here are some of the factors that the preamble to the final regulation said to consider. Type of property, number of properties rented, right? Obviously, the more likely it is to be a trade or business, but one property can be, absolutely. The owner or the owner's agents, day-to-day involvement. Do you provide ancillary services? And then the terms of the lease. So, for example, a single net lease property generally is not a trade or business activity if you look at precedent. However, if I have multiple net lease properties, collectively, they likely do rise to the level of a code section 162 trade or business.